Welcome to the last webinar for this year. My name is Praveena Rajanayagam and I'm from Pitcher Partners Sydney Wealth Management. Today's webinar will focus on investments within super. This slide is just to let you know that all the information provided today is considered general advice. If you require any further information that is relevant to your personal circumstances, it is best that you either get in contact with MLC, and I'll provide those details later in this presentation, or Pitcher Partners directly. This is the agenda for this webinar. There are 4 key items here. The first one being is understanding what is market volatility and investment risk. The second point is what you need to consider before changing your investments within super. The third point is what are the available investment options within your MLC L&H plan. We'll also go through a case study here. And lastly, the Pitcher Partners offering. Before we get into the specific investments for your plan, we need to firstly understand a key driver that can affect the performance of your super, and that is market volatility. So what is market volatility? It is the degree of change to the price of investments over a given time period. Investments in super are generally invested in world markets, and these can fluctuate in line with the performance of the underlying asset classes and the market. I will discuss asset classes in the following slide. The third point is that market volatility can impact the longevity of your superannuation fund. For example, if you are interested in accessing your super in the short term, minimal volatility in super is preferred in order to preserve the capital value. The final point here is that super should be seen as a long-term investment, and we need to remember that big falls can occur within the portfolio, as seen with COVID-19 on the share market this year. Especially during times of uncertainty, it is important to understand the impact of investment risk and returns for each asset class to ensure that your superannuation is in line with your investment objectives. I'll discuss this point in the following slide. This slide shows the trade-off between investment risk and returns across different types of asset classes for an investment. You can see here that defensive assets, which are cash and bonds, are less likely to lose money, and the returns on the investments will be lower over the long term, whereas growth style investments, property and shares, for example, have higher expected returns, and the risk of losing money is higher, especially in the short term. So the key takeaway here is that if you are seeking a higher level of return for an investment, this usually entails a higher level of risk within your portfolio. I'm now going to go through 2 key considerations when you are looking to review your investment options within your superannuation fund. The first consideration is risk tolerance. Why risk tolerance is important is that it helps you understand how much risk you are willing to take on your investments within super. When assessing your risk tolerance, it is important to consider your risk profile. I have put together the 4 most common risk profiles. The first type is conservative. This means that you are comfortable in accepting lower level of returns for a higher degree of stability. The second type is balanced, and this is where you are willing to accept a modest level of risk to seek higher long-term returns. The third type is growth. Here you are comfortable in accepting short-term fluctuations in your portfolio for higher long-term returns. Finally, high growth, and this is the most risky, where you accept extensive volatility to maximize long-term returns within your portfolio. The second consideration is lifestyle. So the first question that I would be asking to yourself is, what is your desired income for retirement? If you're unsure of this number, you can jump onto the Association of Superannuation Funds of Australia's website for their suggested budget for retirees. I've put in the June quarter's numbers, and you can see that for a modest lifestyle for a couple, that's shy of $40,000 per annum, and for a comfortable lifestyle, that's $61,000. The second question that I would be asking to yourself is, how long do you have or want to invest your super? If you have a short-term investment horizon, would you be interested in preserving your capital and utilizing a more moderately conservative investment approach? Or otherwise, if you have a long-term investment horizon, one of the questions that you can ask yourself is, am I interested in accepting more risk and take on a more aggressive investment approach to grow my super? These are the sorts of questions that I suggest that you ask yourself when reviewing your investment options. Now we're going to go through some tools that you can use online to view the available investment options within your super plan. The first tool that you can use is the MLC Fund Profile tool. You can check how your investments, as well as other available investment options, are performing, as well as how are they diversified across asset classes, managers, and markets, and how these investments are invested. So let's go through a case study. We've got Hillary, who is a full-time employee at L&H, currently 40 years of age, and is invested in a high-growth investment option. Her super balance is just over $8,000 with the MLC L&H plan, and she has $62,000 in another superannuation fund. She is currently paying an annual premium of $500 and is expected to receive 9.5 in SG contributions this financial year. We have also assumed in this case study that Hillary will continue to receive the 9.5 until retirement and won't be making any further post-tax contributions. The question here is, what can Hillary do to project her superannuation balance with her current investment option? What you'll need to do from here is to log into your MLC member portal and click the Personal Super Calculator. This calculator will pre-populate all of your data, so the only thing that you'll need to adjust is shown here on the right-hand side, step 1, your retirement lifestyle. So you can adjust your expected retirement age, at what age you would like your super to last for, and how much retirement income you would like per month. And you can also adjust your monthly contributions and investment strategy if need be. And here you can get your results. So in Hillary's situation, we can see that her projected super balance is just over $450,000. Her desired super balance, however, is just over $569,000. And this number is based off that desired retirement income per month, which was $3,908. So we can see here that Hillary's super balance won't be enough to achieve her goals. So from here, you can then review your superannuation contribution strategy and investment strategy so that it can achieve your objectives within super. This slide provides a high-level summary of the default investment option within your plan, and that's the My Super. As per MLC's offer document, the My Super investment option aims to deliver returns over a 10-year period, so that's a long-term investment horizon. You can see on this slide that the level of risk reduces after the age of 55 and the defensive asset mix increases. On a quarterly basis, MLC will check your balance and make any necessary adjustments to ensure your portfolio aligns with the target benchmark growth and defensive mix. If you require any further information regarding your investment specifically, I suggest that you download a copy of the MLC Masterkey Super Product Disclosure Statement. I have provided a link of this document on this slide, and you'll need to select option 3, investment menu. If you require any further information in relation to your MLC account, you can download the MLC app on your smartphone or contact MLC directly. I have provided these details on this slide. This slide provides an overview of the various service lines that Pitcher Partners Sydney offers and potentially can add value to your needs. If you require any lending advice, you can contact our in-house lending services director, John Fisher. I have provided his details on this slide. Similarly, if you require any advice regarding personal insurance, you can contact our in-house advisor, Simon Bennett. I have provided his details on this slide. This is a summary of our office locations. We are a national-based firm and we have offices right across Australia, including Brisbane, Sydney, Melbourne, Newcastle, Adelaide, and Perth. If you would like to get in contact with Pitcher Partners, you can visit our Sydney office or alternatively email or call us. I have provided those details on this slide. This concludes this webinar. Thank you.